Okay, now in this lesson, we're going to look at buying a growth stock as a demonstration. You kind of see what kind of the process I go through, or start seeing some of the things I start talking about and looking at. And we're going to look for a growth stock, so a high-flying stock, a stock that we hope will maybe change the industry a lot, or become a big player in there, or maybe change the world for all we know. But the idea is we're taking more risk on this stock. It might not have anything as far as current earnings even. So we're going to look at a stock that has some high potential. It's what you're looking for growth stocks. They're already probably maybe pretty priced high. The market is seeing this, and you might be saying, do I want to continue to ride that wave, or will it turn and change for the worse? So we're going to look at growth stocks, which tend to be a little bit more risky as well too. And we'll go through a demonstration, not a recommendation. Don't recommend any particular stocks, but we'll go through it as a demonstration. And in this case, we're going to do this demonstration looking at Tesla. You might know Tesla as the automobile manufacturer. They make high-end electric cars. They typically start around $80,000 or whatever as far as an electric car, a high-end sports electric car. But they recently, or not recently, they announced they have this Model 3, which is a big a big $35,000 car, something lower price, and that's really caused the stock to really react positively in that initial short term. And we might be thinking, oh, maybe they can make a car that's more affordable to the masses, at least at the high end of the masses, not an inexpensive car, but it's still an electric car. And maybe that's going to be something that'll change the industry, maybe change the world. Tesla's done a lot of stuff as far as changing the industry, looking at maybe selling direct versus, let's say, selling through a dealer network like they do in the United States as an example. So we'll look at Tesla and we'll compare it to an old kind of company, Ford Motor, and less of a high-end growth company, where Tesla's more because they're trying to do something new with electric cars and other things around electric vehicles and batteries and other things that they're looking to do. So let's compare these companies, and let's start by looking at some of the quantitative or numerical analysis. Okay, we're going to start by doing some quick analysis of Tesla, and we'll do a comparison with Ford here at finviz.com/screener, nice good advanced screener to kind of sort through some stuff. But to do our quantitative or numbers, then we'll look at some qualitative stuff. I happen to have Tesla's website up here too. If you're not familiar with Tesla, they build beautiful looking, I think really nice looking electric vehicles. It's all electric, no gas in there. And for as a high-end sports car electric vehicle, and you can see these different models that they have out here. And what's generating a lot of excitement is this Model 3. You can actually pre-order these vehicles, these Model 3s, and something that's starting at like $35,000 as far as a car that's a full electric car with, giving you, it says here 215 miles of range for like $35,000 US, and it's caused a lot of excitement and a lot of buzz in the industry out there. So that's Tesla's Model 3, and as far as taking a lot of orders on that, as far as without selling them, but taking pre-orders on it at this point in time. So let's look at some numbers now. So here we are at FinViz, and we're going to type in the numbers here. So we don't have to do a big stock screening thing. We don't have to go through the automotive group. We're going to go in the upper right here where has the ticker. You enter the ticker, or you can look that up on like Yahoo Finance, look up the company. You can find its ticker symbol. I know Tesla has TSLA, and we'll compare it to Ford, old automobile company, pretty good company in a lot of ways, but their ticker symbol is just F. So we'll hit the enter key here, and we'll compare Ford and Tesla, and you should see probably some pretty significant differences between them. You can see in this particular time, Ford's gotten a lot of volume versus, like, so let's say Tesla. When Tesla announced the Model 3, their volume just went, as far as their stock trades in a day, went crazy. So you can see they're both in consumer goods. They're auto manufacturers is where they place Ford and Tesla. Once again, this is not a ranking. This is just alphabetical when you see this first list. So let's start looking at this, and we're looking at this for Tesla to be a high-end growth company. All right, so this is something where we want the price to appreciate on our stock price, and we might not get a dividend. In fact, we should expect no dividend on a high-end growth company. So let's take a look at that, and we've got, first we'll look at some of the valuation numbers. What's the price look like? You can see first price to earnings number. You can see Ford has a really low price to earnings. They're really kind of a good value right now if you're looking at price to earnings relative to its earnings, well below 10, certainly in the 5.38. So that's something interesting. But we're looking at Tesla, and you can see, and this will be very common with some growth stocks, they might not have any earnings yet. In fact, Tesla has not made any money ever, at least at the time of doing this. So their price relative to their earnings is not applicable. It's in effect zero because they have a price. Sure, you can buy them, but the stock, but they have no earnings against that. So when you look at things like price to earnings or price to earnings growth, which is the PEG ratio, you can see no numbers there. If you're looking at value stocks, by the way, a value stock something under 1 for a PEG ratio, Ford at 0.6 seems interesting there. So it may be more of a value play. But Tesla, we're going to look at it as a high-end growth play, something that's going to change the world, and we want to be on the ground floor on that. So, but we're not saying a price to our earnings, so we can't look at those numbers. We look at price to sales and price to book. It's certainly better than Ford and their price relative to their underlying assets, especially book. You're getting a pretty good price. They've got a lot of underlying assets. They own a big solar manufacturing facility and all, or not solar, a big battery manufacturing facility and expanding that. And actually, they're in the process of buying a solar company, which is a qualitative thing we'll talk about later. But you've got a good chunk of assets there. And future sales and future earnings per share over the next 5 years, they're expecting some high growth there. We'll see if they deliver, but that's the idea of buying these guys is, you're not looking at that, kind of slow, nice growth over 5 years of 9%. You want to get paid a premium for the risk you're taking on buying a high-end growth stock, and that's the idea of looking, hopefully, for an earnings per share that's, a nice growth number, like this is 35%. All right, so that's that. So let's look at financials. Now, dividend, a growth stock should not pay a dividend because they should be taking all that money and investing in the company and to grow the company and really grow their share price for us as stockholders, right? So a company that's established, sitting on lots of cash, will pay a dividend. And once again, more of a value company. Ford's paying a pretty nice dividend at this moment in time. But Tesla, you can see no dividends, and you shouldn't expect a dividend. Return on assets, equity, and return on investment, negative numbers, kind of concerning there. Are we being efficient? Are we, getting some returns there? But once again, we're looking for that long-term growth, but that's something to be aware of. Also, you want to watch out for growth companies that might be taking on a tremendous amount of debt and having a hard time paying their bills and things. So you can see current ratio and quick ratio is paying their short-term bills. You want that to be a number above 1, and you can see that they're doing that fine, or at least at 1 with the quick ratio. So they're paying their bills, but they're not making money, but they're paying their bills. And long-term debt, yeah, they've taken on some debt. It's not a huge number for Tesla there, but they've taken on some debt, and they're using that debt to help fuel their company would be the idea behind it. I would want to dig in deeper into their financial statements and some of the things their CEO, Musk, has said, Elon Musk, around, how are we using that debt we're taking on? How are we using it when we issue stock to, finance the company? And are we using it to grow the company, or maybe buy things that help us grow the company? But not scary numbers here. You can see Ford's got some scary numbers up here because they're trying to service a lot of big force of people, a lot of plants. They're also having to take care of people with pensions and things that they have an obligation there too, and so they maybe are taking on more debt. But you can see not bad as far as with Tesla. And profit-wise, you can see they're not making any money yet. They're losing money, right? They have a negative profit margin because they're putting all that money into research and development and building these new cars and building the Model 3. So every car they sell, they're in effect losing money as when compared to looking at an overall profit margin as they build the market and build out their organization. Not uncommon for a growth stock, but it'd be nicer at least if they're making some money too. You might find that in technology where they can maybe turn some profit maybe a little bit faster just because you don't have the hard good costs or the people costs you might have in a big manufacturer like an automobile manufacturer. You can see ownership, who's owning the company and what, how much is insiders, how much is institutions, that kind of stuff. Pretty well bought between institutions and regular folks like you and I. If we look at performance here, this is over the short term, and this is just an initial snapshot here. Year-to-date performance, once again, make sure you're looking at when you're buying in the year. If you're looking at January, these numbers aren't very good because there's only a few weeks there. But if we look over the last year, you can see the Ford stock's down, automotive is down, Ford's down 7, but Tesla's down 21%. And we'll see in the chart here in just a second why that is, but they basically had a big run up with their Model 3 and the launch and everything, and now they've kind of come back. They've had some other types of issues and things, so they've come back, but maybe it's a growth stock that might be a little bit on sale, down 21%. It's something to be aware of and look at. But growth stocks, they'll fluctuate more. They'll have much more volatility and be bouncing around a lot more. In fact, let's look at technical, which will show us our beta, which will show us some volatility. We should see a number above 1 and maybe a big number above 1, and we do. Tesla's 1.34. Ford at 1.29 is actually disconcerting for Ford. That shouldn't be typically that high, hopefully, for them, but it is. But Tesla 1.34, that's not unusual for a growth company, right? They're going to have fluctuations. They're going to be up. They're going to be down. If this was a low beta, like below 1.0, 1.0 and less means it's less volatile than market. The price changes less than the market, less risk. That would be even better. But this isn't scary bad, but just something to be aware of, that if you buy Tesla, the stock will go up and the stock will go down, and you have to be aware of wild swings with that. It's going to be much more volatile than the market. So if you hear people on the news and saying, oh, the market's real volatile, it's been real volatile over the last month, Well, with Tesla, you're going to be even more volatile than that. So just be aware of that. And then you can do like custom stuff. We'll look at the charts here. You can see Ford kind of went down here, this over the last year, and then bounced back and has been in this narrow kind of trading range here after maybe had bad earnings or something, who knows, and it went down. I mean, you can research that and find out. And then Tesla was going down, 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 and then they had this Model 3 in launch, and took off well better than expected as far as pre-orders on that, sight unseen. And look at the stock, rocketing up there. That's what you can see sometimes with a growth stock. Like, whoa, look at it go. But then when do you sell? If you sell. See, now it's kind of come back down, and then maybe it's now down here. Is this going to be its price? Is it going to go back rocketing up? When that Model 3 comes, are they going to rocket up? Are they going to go down? Are they going to have other problems? How's the company running? So this doesn't tell you the whole story, but it's interesting to see down, 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 up, up, up. See that volatility there? If I bought here, I'd be like, oh my gosh, what a bad purchase. Maybe I'm going to sell. And then right when you sell, it's like, oh my gosh, I blew it. Look at it go. That's why stocks are for the long term. This is very over almost like a 4 or 5 month period. Stocks are longer term investments, particularly when you look at that volatility, and certainly in my opinion. You can get news and information. I like just jumping right to the snapshot because it shows my chart, it shows my numbers all in one place for the particular company. It's got news right here. So if I'm looking at something right here, I can read different articles about the company. It gives me a little description of the company itself. Plus maybe what insiders are doing here as well. If we look at Tesla here, you can see that big movement on that chart here, their numbers, different types of information out there that might be going on. Tesla update halts automatic steering if driver is inattentive. They've been having some troubles with their automatic steering. Great technology, cool, but if it doesn't work, it's going to cause the stock to go down. So there's some safety debates and things you can read along that. And there's some things around like over dealership laws and things within, because they want to sell directly. This is how they're disrupting or changing the market, not selling through dealers, but that states and unions and different people are resisting that. Small businesses might be too. So you can see what might be a positive for some might be very negative for others. So if we think about Tesla here, a good example of a growth stock. The idea is, it's going to have low earnings, maybe no earnings, maybe future earnings per share would be good. Financial numbers might be, no PEG ratio or anything, but maybe good price to sales or price to book. And certainly not a dividend payer, and but nice that their debt was pretty good. I like that. The debt was pretty good, though some of their other numbers, efficiency numbers weren't terrific, but good debt numbers there. And then it was interesting. You always see this high kind of beta type number here, as far as the numbers in it being more risky. And that's the thing with growth stocks, and we start talking about this now qualitatively, kind of more gut and more of our more mind kind of coming in there versus the hard cold numbers of quantitative numbers. We learned a lot from the quantitative numbers that we looked at, or we can certainly interpret a lot. Now we got to dig deeper to find out even more. What is Tesla, if we're using this as an example, what are they going to do? What are they doing in the future? I mentioned before they're buying a solar company, people that make solar panels. Is Tesla want to be an automobile company, or do they want to be an alternative energy company? And they make batteries to help, power their cars. Musk, as the CEO, has talked about using the home as being a central place for energy and alternative energy. And is that where solar panels come into play? Are solar panels used in these massive battery factories and these other factories that they'll use, and using solar to help power that as part of an overall strategy? Those are the things you'd want to dig in deeper in and say, does this make sense to me, or does it not make sense to me? And what is the long-term future look at it? Looking back at those basic qualitative things like the industry and the company and what's happening in the overall automotive industry. There could be some big macro events of the overall economy is just in the tank, like 2008, 2009, where we had the Great Recession. Well, all car manufacturers struggled during that time, and a company like Tesla, which is a high-end vehicle, alternative energy electric vehicle company, might struggle even more, which could put pressure on it as more of a startup, more of a growth type company. So things to think about along that, though their debt numbers were pretty good looking at that, so that makes me feel better that maybe they could weather that storm. And what are some of the future trends out there? Certainly future-wise, the growth of alternative energy is going to be continuing growing. Governments support electric vehicles and things of that nature with like subsidies or things to help people buy them. We see that in different parts of the world, and that helps companies like Tesla. But also future might be, if Tesla has great success, there's nothing that prevents General Motors or Toyota or Ford or any of these other manufacturers from trying to get in there as well. Tesla certainly has the cachet like an Apple or a Google would have, but even still, when Samsung makes a big play in the phone market, the cellular phone market, for example, that does take market share away from Apple, even if Apple is the market leader. Well, Tesla's maybe the leader in high-end sports car electric vehicles, but if, let's say, BMW comes in, who's to say that they can't really erode that market share, maybe even take it over? And the one thing also, as we talk about like not being hot or too hot of products or cool on products, or read something in the news like Tesla's going to change the world, and you buy the stock, and then all of a sudden it drops in price because you need to do a little more due diligence on it. So be aware of that. You might look at Tesla as a good example, where like, wow, that's a really cool car, and I think that Model 3 is affordable for many people, and that could be a big winner, and I want to be part of that. I want to buy some stock in that. And I believe in alternative fuels and alternative energy and alternative cars as far as electric cars. And those could be all things you feel, which could be very emotional. And you want to take that emotion out of it, because you could see like that chart where it went way down, then rebounded way up. If you bought when it was way up and then it went way down so fast, you might sell or not feel comfortable with it. It's easy to say, boy, if I bought at the bottom and watched it rocket up, but you can see it's already down 20-some% from that high just in such a short time. And that's the thing with growth stocks, right? Maybe it's the next Apple, maybe it is the next Google, or maybe it's Pets.com or something like that isn't successful, or whatever. I can't remember the name, one of those internet bubbles that burst companies. But it's a company that may succeed, may not. It's great to buy Apple when they're low, and you've reaped all that benefit, but it's another thing to maybe buy somebody higher or buy somebody that fizzles and never succeeds. So Tesla is certainly a good example of a growth stock, real volatile, high beta, high growth potential. And when we think about qualitatively, you can also think back, what if they succeed? If they succeed, they could succeed and exceed everybody's expectations wildly. They could change the world, in effect. They could change how we consume or how we use automobiles, and certainly how that might look maybe 15, 20 years down the future. Maybe 20 years from now, everybody's driving a Tesla with an electric motor in it. Who knows? Or maybe Tesla, much like DeLorean, if you know DeLorean, much like maybe other manufacturers of automobiles, just becomes part of history. So either way, a longer lesson here, but I want you to show you not a recommendation for Tesla one way or another, but just an idea of what to look for and maybe what to expect if you're looking at a growth type stock and you're expecting that long-term growth, and some things to think about as you look at those types of stocks as a case study, as a demonstration. Best of luck to you, and best of luck in your future investing.